Let's talk about filing status and exemptions. There are 5 different filing statuses: single, married filing joint, married filing separate, head of household, and qualifying widower, also known as surviving spouse. We're going to skip the single and go to the married ones. Okay, so if you are legally married, that means legally within that state, whatever that state's rules are. If you are allowed to be married and you are married legally in that state by December 31st, even if you didn't live together, then you have 2 choices. You can file married filing jointly or married filing separately. Now, married filing jointly means that you're going to put all your stuff together on the one tax return. And it is usually one of the best, tax-wise, one of the best filing statuses you can choose. If your spouse dies during the year, you can still claim married filing joint for that year. If you get married even on December 31st, even though you were single the entire rest of the year, if you're legally married on December 31st, you can use married filing joint. Now, married filing separate sometimes works for couples that are legally married on December 31st, but they want to file their stuff each on their own separate return. Sometimes this is due to the fact that they are no longer living together. Who knows even where that spouse is, but they never legally divorced or separated. So they're still technically married, but they are way separate, and so they're filing separate returns. Sometimes it can happen if they're living together or they still want to file separate returns. Most of the time, married filing separate is the worst filing status you can use. There are many credits and deductions that are not available to married filing separate. And also, if one itemizes, both people must itemize. If they either have to both use the standard deduction or if they both have to itemize. So somehow you got to know what the other one's doing. Once in a while, married filing separate can be beneficial to the couple. Generally, however, not if they have kids. Head of household gives you a good filing status. Not quite as good as married filing joint, but it still is a pretty good filing status. And it's better rates than either single or married filing separate. You can file head of household if you're unmarried or abandoned, and we'll go over that in a minute, as of December 31st, and you paid over half the cost of keeping up a home that was the principal residence of a dependent child or other qualifying dependent relative. So if you, such as a single parent, if you're a single parent, you can file as head of household. Now, what does this abandon mean? That means technically you're married, but the spouse left at least 6 months before the end of the year. So even though you're technically married, if the spouse left by the end of June of the tax year, and you were there the whole rest of the year, still keeping up the cost of the house, keeping up raising children, then you can still claim head of household even though technically you are legally married. A couple special rules with head of household. You can have a qualifying dependent relative that's your parent as opposed to a child, and still use that to get head of household status. The parent is the only one that can live somewhere else besides your house. If it's some kind of child, nephew, niece, whatever, they that you're supporting, they have to live in your house for you to be able to get head of household. And you have to show that you're paying more than half the costs of rent or mortgage payment, groceries, light bill, etc., to get head of household. With a parent, though, an elderly parent might be living in their own house or in assisted living, and you're paying for that, then you can still claim them, and you can still claim head of household status. Another little rule with head of household is that the dependent, you have to be able to claim that one as a dependent, whether it's your parent or your child or whatever, and we'll be going through the dependency rules here shortly. But it's normally you have to claim that person as a dependent to be able to get head of household filing status. However, if the only reason you're not claiming, say, a child is because you're divorced and your ex-spouse, by court order, is allowed to take the dependency exemption, even though that child lived with you, you paid the household bills, you are raising that child in your house, then you would normally get to do head of household, except for the fact that the court is giving the dependency to the ex-spouse. Well, then, in that case, you can still file as head of household. All right, a qualifying widower, also known as a surviving spouse. This happens for 2 years after the year that the spouse died. So we said back on the married filing joint slide that the year that the spouse dies, you can file married filing joint. Then for 2 years after that, you can file this qualifying widower with dependent child. Now you have to have a dependent child. You have to pay over half the cost of maintaining the household for the dependent child. So let's look at an example. John died in 2013. So Mary would claim married filing jointly in 2013. Then in 2014 and 2015, for those 2 tax years, assuming she still had the child that she was taking care of, she would file single, surviving spouse, qualifying widower. If she didn't have a child, she would still do married filing joint in 2013, but then starting in 2014, she would have to switch to single. If she has a child, when she gets to 2016, she would switch from qualifying widower, surviving spouse, to head of household. Finally, we get to single. Single is whatever is left over. If you don't fit into anything else, you fit into single. You do have to be technically unmarried or legally separated. So if you are technically, legally still married, you cannot choose single. You can choose married filing joint or married filing separate. And if you have an abandoned spouse, you can choose head of household. But you can only choose single if you are legally separated from that person or completely unmarried. Okay, let's talk about exemptions now. There's 2 kinds of exemptions. There's personal exemptions and there's dependency exemptions. Personal exemptions is what you take for yourself and your spouse if you're married filing joint. However, there's only one personal exemption for each individual. So if your parents are claiming you or someone else is claiming you, then you don't get one for yourself. Dependency exemption is taken for people you're claiming who are either your qualifying child or your qualifying relative. So there's 2 different types of dependency exemptions. Now, each exemption in 2015 is $4,000. So if you have a married couple, there would be 2 exemptions, one for him and one for her, and personal exemptions. And then if they had 3 children, they would get that qualify under qualifying child, they would get 3 dependency exemptions. So that would be 5 exemptions. They would multiply that times 4,000. They would get $20,000 in exemptions. Now, who qualifies for you to be able to claim them as a dependent? Well, there's 6 tests. Here are 3 of them. The first test is the relationship test. The child has to be your child, your stepchild, your adopted child, or your sibling, meaning your brother or sister, or your half-brother or sister, or a descendant of any of these, meaning children of your brother or sister. So, in other words, nephews and nieces. Foster children may also qualify. There's separate rules for those. Also, the child must be younger than the person claiming him or her unless that child is permanently disabled. So, if you are claiming your brother and your brother happens to be older than you, if your brother is permanently disabled, then you can still claim your brother. A domicile test. This is where it says that that child has to have the same place of residence as yourself for more than half the year. You have to live in the same house. It doesn't say you have to pay, like the head of household says you have to be the one paying more than half the bills of the household. Here, it just says you have to live in the same household as a child. So somebody else might be paying the bills. You are living in the same household. The age test. The child has to be under 19, and then it doesn't matter how much they're working or whatever to a certain extent. Or they have to be a full-time student, like a college student, under the age of 24. And a full-time student means that they're enrolled in full-time, whatever that college considers full-time. So OCTAC considers 12 credit hours to be full-time. So you'd have to be enrolled at least 5 months, 1 semester, at 12 credit hours or more to be considered full-time for that whole year. So then if the child, say, graduates from college, the year that they graduate, the parents, because they're usually graduating in May, so they've been full-time for that last semester, the spring semester, so the parents can still claim that child, assuming they're under 24. Now, if the child is permanently disabled, then the age test doesn't apply. The joint return test. The child themselves can't file a joint return with their spouse unless it's just to claim a refund. So in other words, let's say you have a 17 and a 16-year-old children that went ahead and get married. Only they can't afford to live somewhere, so they're living with you. So you can still file your child if your child is filing a joint return task with their spouse only to claim a refund. They're not legally required to file a tax return. The only reason they're doing it is so they can get their refund. Then you can still claim your child. Otherwise, if they're legally required to file a tax return, they earned enough money that they're legally required to file a return, then you cannot claim that child because the child will be claimed right on the married filing joint return that he or she is doing with their spouse, even if you were the one supporting them in your home. Citizenship test. The child has to be a U.S. citizen, a resident of the U.S., Canada, or Mexico, or an adopted alien child. Self-support test. A child who provides more than half of their own support cannot be claimed as a dependent of someone else. So funds received by students as scholarships are excluded from the support test. So if you are a student at OC Tech and you work, if you just get money from scholarships and stuff, then even though you're using that money to pay rent or whatever, if you make enough money from a job, then you're providing more than half of your own support, paying rent, groceries, utilities, etc. Then you can be not claimed by your parents. All right, those were the tests for a qualifying child. We have to run through those tests first. If that doesn't work, then you're going to look and see if this particular person that you're supporting is perhaps a qualifying relative exemption. Okay? So here's 5 tests for the qualifying relative. The first one is a relationship test, just like the qualifying child. However, it's a little more expanded. This includes parents and grandparents, uncles and aunts. Does not include cousins, however. However, in addition to relatives, you can have a member of your household, even if that person is unrelated, like a friend, for the entire year. Then they can meet the relationship test, meaning they lived with you from January 1st to December 31st of the tax year, okay, and you supported them, etc. Then if it is a cousin, or even if it's, like I say, an unrelated friend, that person would pass this test. They had to live with you from January 1st to December 31st. And now if they're a parent, a grandparent, uncle, an aunt, or a regular child, whatever, then they don't have to live with you from January 1st to December 31st. They have to live with you more than half the year, but they don't have to live with you the entire year. The second test is a gross income test. The person you're trying to claim cannot have gross income in excess of that year's exemption, which is $4,000 for 2015. So in this case, if that person makes even $4,001, too bad, even though you supported them, they have to claim themselves and you cannot claim them. The support test. The dependent must receive over half of his or her support from the taxpayer. Now, back in the qualifying child rules, it just said that the child themselves couldn't provide more than half of their own support. Whereas here it says that you have to provide more than half the support for that dependent. A joint return test, again, whoever you're trying to claim can't file a joint return with their spouse unless it's solely to claim a refund. And the citizenship test is the same as the one for qualifying child slide. So here we've learned how to determine what filing status and what personal exemptions we can take and what dependency exemptions we can take.